Julien Lazar, we see investors embracing sustainable investing in fixed income, especially passive fixed income. We see asset owners being very keen to mitigate risks from climate change and net zero transition. Now, of course, the risk mitigation is only as good as the risk measures that we use in constructing our investment strategies. And these risk measures, they come possibly with biases and therefore unintended consequences. You've written a research paper, and in your recent research paper dealing with income bias and sovereign ESG scores, you propose for a way to remove biases in these risk mitigation measures. So could you summarize your research and the importance of it for index users?
Yes, of course. Thank you, Arne. And the aim of our paper is to inform our clients of the importance of what the World Bank has called the ingrained income bias of ESG scores. It's essential reading to learn more about developments regarding the integration of ESG into the sovereign fixed income universe to help investors avoid unintended consequences on investment strategies, such as a lack of incentive for certain emerging or developing countries to take courageous decisions on their climate plan because they are financially constrained by a drying up of the capital market. And in our research, we adjust the sovereign ESG scores for income bias using an exposed approach, enabling differentiation between countries' ESG performance independently from their income level. Using a simple statistical framework and our proprietary sovereign risk monitor methodology, we estimate a log linear relationship between the income level of economies and their respective ESG performance assessment. And residuals are then used as income-adjusted sovereign ESG scores. So let me say a word about our sovereign risk monitor methodology for our audience. It was originally developed by Beyond Ratings as part of work leading to the granting of a financial credit rating agency license by the ESMA in March 2019. The effectiveness of SRM in assessing the ESG risk of sovereigns has been highlighted by the World Bank and notably used to tilt the FTSE ESG government bond index series.
Julien, thank you. Lazar, from your perspective, could you outline the key findings that you think are most important in the research that you've done?
I would be delighted to. So the key findings from our research can be summarized into 3 key points. First one is that the income bias is most pronounced for G scores, but is weaker for S and particularly E scores. The second point is that the existing differences in ESG performance between high-income OECD and non-OECD countries are amplified after adjusting for income bias. And final point is that the low-income economies score higher after taking into account the income bias in each of the E, S, or G pillars.
Thanks, Lazar. We have included a chart within the paper that illustrates the average income-adjusted sustainability profile scores versus the gross national income per capita. Just as a reminder, the sustainability profile aggregates E, S, and G scores. So let's look at that now. In this figure, we can observe the initial ESG scores and compare them with income-adjusted ESG scores. It appears that the average sustainability profile scores curve always has a concave shape once the income bias is corrected. However, this stylized fact hides significant disparities that allow us to differentiate between sovereigns more clearly on their ESG policies and commitments regarding the expectations linked to their income level. The dispersion around the average is more than twice as large after correcting for income bias. As an illustrative example of the right-hand side of this figure, we can cite the marked heterogeneity between countries such as Sweden, Singapore, and Qatar, which with comparable per capita GNIs have very, very mixed income-adjusted E, S, and G scores.
Thank you for sharing your research, Julien Lazar. Very, very interesting.
Thank you, Arne. Thank you, Lazar. And thank you for reading our research.
Thanks, everyone. It's been a pleasure.
I think your research provides fundamental insights into integration of ESG and climate considerations into sovereign debt investment decision making. And I hope that our audience will download the paper on the research section of the FTSE Russell website.